If you've ever looked at a massive enterprise supply chain or the software that runs it, the sheer volume of moving parts can feel overwhelming. SAP Material Management, or SAP is the core module designed to organize that complexity. It ensures that a company has exactly the materials it needs, right when it needs them, while minimizing the cost of carrying inventory. In this video, we'll trace the exact path the material takes through the system. We'll start like identifying a need, track it through the warehouse stores, and finally paying the supplier. By the end, you'll know the specific transaction codes to use for each step, and you'll see exactly how warehouse actions automatically update corporate financial records. Understanding this end-to-end cycle ensures you know exactly why the system is asking for specific data and where that data goes once you hit save. Let's get started. Step 1. Before any procurement can begin, the SAP system must be taught exactly what the item is. This information is stored in the Material Master. This is the central database holding every detail about a material, its description, its weight, and its accounting data. Users create this foundational record using the transaction code MM01. Once the material exists in the system, we need an internal team to buy it. In SAP, this group is called the Purchasing Organization. They are the specific unit authorized to negotiate prices and buy this material. If the Material Master isn't configured properly, the Purchasing Organization cannot systematically procure the item. It is the mandatory foundation for everything that follows. Let's look at a practical scenario. Imagine an office department realizes they need to purchase a batch of new laptops. The process begins with a purchase requisition, or PR, created using transaction code ME51N. This is an internal request to the purchasing department and carries no legal commitment. The purchasing organization then selects a vendor and converts that internal request into a formal order. This document is the purchase order, or PO, generated with transaction code ME21N. This is the legally binding agreement sent to the supplier. It is important to distinguish these two. The PR is for internal permission, while the PO is the official commitment to an outside vendor. When the newly ordered laptops finally arrive at the facility, the process moves from digital planning to physical inventory. To record this arrival, warehouse staff use transaction code MIGO. This is the tool used for any movement of goods into or out of the facility. To tell SAP exactly how to adjust the inventory logic, MIGO relies on 3-digit codes called movement types. A goods receipt uses movement type 101, which tells the system to increase stock levels. A goods issue, such as sending materials to production, uses codes like 201 or 261 to decrease the count. Selecting the wrong movement type in MIGO results in incorrect inventory counts, which can lead to production delays or unnecessary reordering. Once the physical goods are in the warehouse, the vendor's bill must be processed using transaction code MIRO. SAP uses an automated checkpoint called the three-way match to verify that the bill is accurate before any money is sent. This diagram shows the logic. The system compares the quantity on the purchase order, the quantity recorded during the goods receipt, and the quantity listed on the vendor invoice. If you ordered 100 laptops, received 100 laptops, and were billed for 100 laptops, the match is successful and the invoice is approved. This safeguard ensures the business only pays for materials it has specifically ordered and physically confirmed as received. SAP is integrated with SAP Financial Accounting, or FI, so logistics actions automatically trigger the necessary accounting entries. When the goods receipt is recorded, the system debits the inventory account, reflecting the new asset, and credits a temporary clearing account. During invoice verification, the system reconciles that clearing account and credits the vendor account, showing the company owes the supplier. SAP FI then processes the final cash payment to the vendor to settle that liability. This integration means that every physical movement in the warehouse has an immediate and accurate financial consequence on the company's balance sheet. This is the complete procurement cycle: requirement, purchase order, goods receipt, invoice verification, and payment. You have now seen how physical supply chain actions directly drive the digital financial records of the organization. You can download the cheat sheet linked below, which includes all the T-codes and movement types discussed in this video. Understanding these connections allows you to troubleshoot issues across departments and manage the flow of materials through the entire system from a single workstation.